Hey, it's your man Charlie P in a trade on GBPUSD in London session. About to go to bed, just made myself risk free on it, but I wanted to take a moment and break down what we got going on. First off, this trade is taken across multiple prop firm platforms as well as personal account. This is the one we're focusing on because this is the main TP that I'm wanting to get hit. It's just at the top of this hour. FOMC is today, so I didn't really want to stay in this trade too long. I was hoping London would kind of push up and just knock that out in this zone right here. So that would be ideal. But either way it goes, I'm risk free at this point. But that's where my TP is on this particular account. If I go to another account, let's see, this one's a bit higher. Then let's see on this one, that's about the same as the other one. This one, my personal account, I got it way up there. So on my personal account, I'm letting it go way higher just for the matter of if FOMC spikes up, then you know I'll try to catch all of that on my personal account. But the prop firm accounts, I'm just kind of like, you know what, let me just go on and get up out of these. So anyway, but let's focus on this one. We're going to break this trade down. This is my peak of 10 strategy, and let's go over those strategy rules so you can see why I took this trade specifically. So here's a breakdown of my peak of 10 strategy. The first rule here says that H1 must breach a sharp minor support or resistance zone. So here, this area right here, we have a sharp area of what was resistance, because once this made this point, this sharp point, and then it came down, well, once we came back up, we broke it as resistance. Okay, so essentially this is just a break and retest, but it's just the way that I see it on this particular setup. It happens very in a specific way, but overall, yeah, it's just a general break and retest of structure. But anyway, once we broke this sharp resistance point, the next rule says that H1 must then retrace and close shortly past the 10 EMA. So let's just look at that part right quick. So after we broke it, H1 retraced and came down and closed shortly past the 10 EMA. That's my white line. So as you see, it closed just past that white line. And the RSI 5 will close past the 50 level, leaving Ehlers-Fisher behind. So at the same time that this H1 candle closed past the 10 EMA, down here, the RSI 5 closed past the 50 level, like it says right here. RSI 5 will close past the 50 level, leaving Ehlers-Fisher behind. So notice down here, it closed past the 50 level. Ehlers-Fisher, the green line, is still way up here, chilling, right? So that rule was also met. The next one, H1 confirmation candle, will be one of the following. So when I say the confirmation candle, I'm talking specifically about this one that closed past the 10 EMA. This bear candle, that's the confirmation candle, because the way that closes lets me know, okay, this is a peak of 10 because it's peaking past the 10 EMA. All right, so that's the confirmation candle. So I'm saying that it will be one of the following candles. In this situation, we're in London session. I'm Central Standard Time, so this was the 1 a.m. candle or the 9 o'clock chart time candle. So if I use this crosshair and put it over here, this shows down at the bottom 9 o'clock. That's just the chart time, but that's equivalent to 1 a.m. So that rule is met. Then on the reassurance template on the M15 time frame, the 200 SMA should be on the side of the 400 you plan to trade in. So what I mean by that, TP finna get hit. But if we go to my reassurance template And on the M15, seriously? Really? Y'all see that crap? Come on, dog. How they just... This mess better not retrace all the way down here or something. Ah, that'll make me so mad. But anyway, what I'm saying is the 200 SMA, that's my yellow line right here. And then the 400 is my red line. So I'm just saying the 200 needs to be on the right side of the 400 that you plan to trade in. So since we wanted to buy this, then we needed the 200 to already be above the 400. A lot of times that's the main thing that'll keep you from having a valid trade. This rule won't be met and everything else will be met. All right, then the last rule we've got is to enter when M15 grabs the 50 EMA, but do not enter the trade if M15 is coming out the bands. So, all right, cool, TP was hit. So if we go back to the main template, then what I'm saying is, again, enter when M15 grabs the 50 EMA. That's why I was saying I actually got in this trade late. If I go to a different account that's still rolling. So as you see, we're in this trade above the 50 EMA. I should have gotten in like down here or something. I should have got in somewhere down here, but again, I woke up late. That's my bad. So I missed out on say 5 or 6 pips that I could have had. So that's what I mean when I say enter when it grabs the 50 EMA. I like to enter on the opposite side of the 50 EMA as whatever direction I'm trading in. So since I'm trading up, I want to enter below the 50 EMA. That helps me avoid a ton of drawdown. That's really like, that's my secret to sniper entries and having very little drawdown. Is just enter on the opposite side of the 50 EMA on the 15-minute chart. For most of my trades, there are some setups, or a setup in particular where I enter on H1, but anyway, and don't enter if it's coming out the bands though. When I say if M15 is coming out the bands, I'm talking about before it retraces. So that's up here. I wish I had an example that I knew of where I was like, see, this is what I mean. But if this right here, when it went up and when it broke our resistance point, and it was up here, if this would have went up into the bands before it retraced down to grab the 50, I'd have been like, nah, don't do that. You know what? I'm finna go ahead and TP these. Okay guys, so I actually just went ahead and TP'd across the board except for my personal account. I'm gonna leave my personal account going. Let me drag that up a little bit more to ensure I don't lose nothing. It's like a for real break even trade, or give me a little bit of profit. But anyway, so 3 prop firm accounts, we out of there. But where was I? M15 coming out the bands and all that good stuff. But anyway, the main reason I got out where I just got out though is because we have this zone on H1 that, for one, it's London session. London normally will, like, it'll hit a zone, and then when New York session starts, it'll retrace back down. So I'm assuming what's gonna happen, we may get a push maybe up to this point, and then it'll retrace down to start the New York session, and then maybe bounce up from here and then continue up for the rest of the day or something like that. Or well, again, FOMC is today. That's another reason I kind of want to go ahead and get out the market on the bigger accounts, because FOMC is crazy and I don't want to risk, I just want to take my money. I don't want to be greedy on those. But my smaller account, again, it's a flip account. I'll build it up, withdraw, build it up, withdraw. So that one I'm not tripping on. I'll just let that do what it does. So, but anyway, that's the gist of the Picotin strategy. I'll have the link to these rules in the description of the video. But yeah, that's the Picotin strategy, as simple as I can break it down, rule by rule. Hopefully Hopefully that made sense. I will holler at y'all on the next one.